Sorry, guys. There's this stupid button that you've got to. Not your problem, Lewis. No, and thank you, Daniel, and others. It's just crazy. Anyway, too many control panels. Um, as I was saying, yesterday's trade on pound US dollar, the way I've been flagging to trade it would have been a small winner. Entry here, 10 pips above the 9 o'clock bar. When I say 9 o'clock, that's the platform's 9 o'clock. It's actually the 7 o'clock bar at GMT. So entered here, 10 pips above the the last candle of the day. Sorry, last candle before London session, and I'm using the 3 pip rule. So one, two, three. We would have had to close here, and a very small profit, but a profit nonetheless. Pound yen would have been a loser, I believe. We'll have a look at that a little bit later. But here's the thing today, we've got exactly the same entry short. If we chose to do that, I would not. I absolutely would not choose to do that. Whether I now say, okay, there's no trade at all, and the reason I wouldn't trade to do that would be that we're trading straight into an untested daily pivot. That's a no-no for me. Whether I'd then be prepared to put my entry 10 pips above and trade just the long is another thing that I need to discover, and that's what forward testing is all about. So there's our candle, there's our open, 29.95. So 30.05 would be the entry. I think I'd be prepared to do that. 30.05 is about there somewhere. Again, you're trading into the high of the day. Not great, but this is not a slingshot strategy. This is completely different, and it is trading breakouts. I mean, that's what it's all about. We're trading breakouts. So there's your entry long at 1.3005. God, that's hard to read, I've got to tell you. And the entry short, I'm not going to. Well, I'll put it there, right? Because we are testing this. That's silly not to have it there. Because I'm not trading it, right? Is at 1.2977, and I'll make that red because I've got a phobia against trading into untested daily pivots doesn't mean this strategy can't overcome that. So let's not use my bias. Let's just use. Why is that doing that? That should be dashed, but it's not dashed. Why is it so? That's on minimum. Let me try it again. Let me use that dash. Okay. There's two lines there, obviously. No. I give up. I give up, guys. 77 was the level. Anyway, we know that. I'm spending far too much time on this. 7, 7. Okay. So there's our entry long, there's our entry short. We'll have a look at pound yen. As I said yesterday, using my method of trading would have been a very, very small winner on pound US dollar. But on pound yen, it would have definitely been a loser because there was our entry. There was the candle that we choose to trade, which is the last candle of the day, or the range of the last 3 candles, either one, whatever our preference may be. And there was our entry short, which where you're going to put your stops. This is again one of the systems that we need to work out. So worst case scenario, I would have thought your stop loss would have been where the entry for the short would be, and therefore you would have been taken into the trade. Candle 1, candle 2, candle 3, and you would have been taken out on the last candle. The way I trade it, right, or the way I used to trade it, I think. It's a long time ago, guys. So that one would have been a loser. What have we got today? Here's the bar that we'd be trading. So let's fix all that up. The low of that candle is 148.26. So let's go 140.77. 77 seems to be the number today. There we go. That's close enough. And the entry short would be 10 pips above that bar or the range, guys. Which one? Let's go the range. The range, assuming it's a doji, I don't know where the high is. Ah, la 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 la. Where's the high of that bar? How do I know? Let's go to another time frame. 30-minute chart. We're looking for the 7 o'clock bar. Yes, we are. So 30 minutes. 7 o'clock would be one of these two, I think. There it is there. So the high is here. So we want 10 pips above that, which is 141.11, say. It'll be 141.21. So 141.21 would be the long entry, about very close to there. Two one zero zero. Okay, let's change that to green. Green's a horrible color on this background, isn't it? Absolutely shocking. Let's make it white or black, anything. Green just doesn't cut it. We'll make it white. There we go. So there's our long entry. There's our short entry, and that will definitely be a breakout if it actually does that. All right, so that's what we've got, guys, today. If you're trading any of the other or monitoring any of the other currencies, I suggest you probably don't trade this until we've forward tested it long enough. But they're the parameters that I'll be using today for testing purposes only. How are we going, guys, with that system that we can't yet call a system because it's only an entry system. We haven't yet got how to manage it. And you guys, I want you guys to give me some ideas around that. I've got my own ideas, of course, but I'd like to hear yours as well. I'd like this to be developed in this session, this particular trading strategy, so we can call it the, I don't know, YouTube Learn to Trade Live and Free strategy or something. I don't know. We'll give it a name if it works. We've got to make it work first, of course. So far, so good. All right, what have we got today? Let's take a look. See. I need to get rid of this control panel. It's in the worst place. I know you guys can't see it, but it just hovers all over me. Righto, we're still in euro dollar, and let me take it down the bottom again. All right, still in euro dollar on the 4-hour chart. Did I trade this on the 4-hour chart? Yes, I did. It was a false break. Those of you who aren't aware of the trade, it was a false break of this trade line and clear break below, hit support, back above the trade line, retest the trade line, entry above that bar, stop loss below that bar. Fortunately for me, that trade should have expired after 6 bars. It didn't, and I was taken into that. This time it was fortunate. Sometimes it's not so fortunate if that's the case. So you've got to watch, if you're trading on an EA, just make sure you watch what time you set the expiry. There is a default, or should be default, that says 6 bars, depending on the time frame you are trading. Maybe I was on the wrong time frame, I don't know. Anyway, that has happened, and this time I got on the right side of that. I don't see anything to do here. I've already taken profit. I've already moved my stops 32 pips above entry, I think it is, something like that. Kept it as safe as I think it needs to be kept, which is underneath the monthly pivot. This looks bullish to me now, I must say, and it's against my bias entirely. My bias is short, but it's now starting to look a little bit bullish to me. I see, and this is an old strategy as well. I might as well tell you all these old strategies. When you see a double top, or actually it's more accurate going the other way. When you see a double bottom followed by a double top, which I guess you've got here really, and then you find support, it's really an indication that this double top will be tested again. So the strategy says, right? I'm not saying that that's what the strategy says. I've never traded that ever, but I know it is a strategy. So that's interesting in and of itself. But generally, what you're looking for is a second retracement off the high here, and then look for consolidation. And I think what do they call it? A 4-day narrow range bar. Now I'm getting complex, aren't I? What is that? Well, it's basically a very small candle inside bar. So retracement, inside bar, inside bar, inside bar, and the fourth one is the tradable one, and you trade it long. Told you it was complex, right? Don't don't press me on that. But that I'm just telling you what the strategy is, not mine, but that is a trading strategy. So I'm probably expecting a retracement back to the monthly pivot, and it's there that I will look for a slingshot setup, not one of those narrow range four narrow NR4s they're called. I won't be looking for that at all. I'll be looking for something that looks like a slingshot setup here, and I will look to increase or scale back into this because I think that would be a reasonable thing to do. Again, it's against my bias, but I clearly see here a base, a lower, sorry, higher low, and then exactly what I've been looking for on euro, not euro, Aussie CAD, and sorry, Kiwi dollar and Kiwi CAD, and I've been looking for this to happen. So if I ignore this now, I'm being pretty sick. I didn't ignore it in the first place because we got in at exactly the right place, which was this lower, higher low. I know that sounds weird, but it is a higher low based on these bottoms or this bottom. And yes, it's a lower low based on that one, but that's not the important thing. This is the important thing. And it is important that we took out this low actually, because what that does is provides liquidity for the buyers. And as you can see, there it is. That liquidity was found, and they took it straight back to the top of the range. So retracement here, and then I'm looking for a long. Can I trade the retracement? That's the daily chart we're looking at, right? So I'm just setting you up for where I'm headed in my own mind, and my own mind says back to here, and then long. Can I trade it to there? You can always trade it to there. Whether it's wise or not, or fruitful, is an entirely different story. I really don't like any trade line through here, I've got to say at the moment, because what I like to see is a swing low, join a swing low. This is not yet a swing low. And even if it technically was, is it really a swing? It's just consolidation. It's just noise as far as I'm concerned. And the same could be said for this high here. It's kind of there, but early in the day, I'm not that fast, I've got to say. So I'm not going to use either of those lines until something substantial turns up here. So that makes it very, very difficult for me to trade, and that's okay. I can wait for a swing to form, and therefore a trade line appears, and therefore we can trade. So at this point, answer's no. And of course, I don't need to do anything here because I'm going okay on euro dollar as it is. Euro CAD is interesting. You can see what's happening here. We've burst through the top of this range. We've come back and retested it twice now. This looks very much like a potential false break of the support trade line, does it not? But it's very, very dicey. Why? Because, well, number one, we've got a candle. I think I'll go a bit tighter so you can see it. We've got a candle that barely closed above the trade line. And I better make that trade line absolutely perfect, haven't I? Because it's important that it is. There it is. So it's just barely closed. You'd have to say it's on the line rather than above the line. Then we've got the drawback or pullback candle that we seek. That's exactly what we're looking for. But what we really are looking for, let's go back to euro dollar and look at that false break that we had there. What we're really looking for is this. a clean break above the trade line, so back into the range, then the retest. That's what we're looking for. So if you carry that forward to Euro CAD, we haven't really got a clean entry or a clean re-entry above that trade line. So until that happens, this is a really, really 50-50 call for mine. But it makes it impossible to trade, or what makes it impossible to trade is the fact that we're trading straight into the daily pivot. Yes, you could say it's been tested. I'll contest that. I don't think it's been tested at all. I think price has actually come to the daily pivot rather, the daily pivot's come to price rather than the reverse. So here's where price was. Here's where the daily pivot was yesterday. Daily pivot's come to price, not the reverse. And what I like to see is price come to the daily pivot. Then the daily pivot can act as resistance and send us that way, or we can break, retest, and go that way. So that's how in fact, it's probably the most important indicator on my chart, was one of the only indicators on my charts, is the daily pivot. So I hold that in very high regard. It doesn't mean that it can't break. Of course it can, but trading into it is a very, very low probability scenario, so I don't do it. So what I really want to see here, if this is to be a false break, is price to go something like this. This candle would be just fine. If we actually took the daily pivot out, then we got a selling bar coming back to the trade line, if not to a former level of resistance, of support rather. That level there would be just fine. So if that even breached back to here, that would be an entry long for me. Making sure that I took profit before that level there. That's important. Don't want to trade through the highs. We are in a range, very tight range, which is not yet 1 day. Always is a day and a half old, let's say. So they're the parameters that I'm looking at. So I don't want to trade long here until I see that. Do I really want to trade long is the question. I can't answer that because I can't remember. So what I do, of course, is go to a wider screen and see where I'm at. Okay, where I'm at is a second breakout of this range that we've been tracking. Did we talk about this yesterday? We did talk about this yesterday, where I thought this bar was too big to trade as a single false break bar. And what I mean by that is when price breaks through here, exactly the same as we traded this bar here, single candle breakout, trade underneath it, got the profit here, and then that's all we got. We moved our stops to entry and we only got one lot of profit, but it's a winner. But this bar is too big, don't you think, to do exactly the same thing? In other words, place the order underneath here and put our stops probably above this swing. If you were to do that, I think I did talk about this yesterday actually. If you were to do that, you've got a risk of about 160 pips, and your profit potential is around about 1-to-1. But in the meantime, you've got to get through all this support here, and there's lows here and shoulders and all sorts of things. So I didn't think that was a reasonable trade to take, and therefore I haven't done that. So what I am looking for is the traditional way that I trade that, which is allow it to break, allow the consolidation to take place, which we're seeing, then duck underneath the trade line that's broken, retest it, and then look to trade it short. It's a much longer process, of course, but that's traditionally how I trade a false break. So go to any time frame you like, and you'll see that we're looking at exactly the same thing, not going long, but potentially going short. So what I really want to see here from the smaller time frames is price sneak back into this orange area, into this range, and then give me maybe a lower high or something like that. By that time, hopefully, I do have something that I can use as a trade line. So I want something of confluence, maybe through here, and look, pardon me, for a break, find the resistance, back underneath the daily pivot and both trade lines, if you like, and then retest them, that would get me short. Taking profit before the low of the day, always the rules are the same. Or take the low of the day out, then come back and retest, different story. So that's EuroCAD, that's what I'll be looking for. The Aussie news again today, and yeah, look, mediocre GDP number came out. The market didn't really react too much on that. There was a bit of a sell-off on the Aussie, not too dramatic. We we took advantage of that on Aussie yen. Actually, I'll get to that shortly. Um, but this does look to be an interesting scenario to me. We have broken, and this is really a classic intraday trade line. It's not a substantial trade line, so it's a soft level. Let me put it that way. But it has been broken and retested, driven us to the monthly pivot, of course. What, and I think there's a couple of possibilities here. Possibility number one would be that we get back above that trade line and retest it. If that were the case, then I think I would have to consider the long, remembering that my medium term scenario on this cross is to hit this level at some stage. That could be middle of January. So I'm not saying now. It could well be the middle of January. Um, what does that look like? It actually looks like the middle of February, all right, in time. So I'm not suggesting right now that we shoot for that area, but what I am suggesting is that by mid-February, I'd like to see price up here, and I'd like to have taken advantage of that. So, it's not a case of gee whiz, I'm a bull, because I'm really not, and I think the level that I was looking to get long here, and I was looking to get long, was this level here, 67.45, and that black line. We didn't get there, and now price is pulling back off its highs. So I'm a little bit on the don't know side. I've got to put it that way. So I'm relying on, I guess, price to tell me what's going to happen next. Interesting, as as soft as that level is, that it has been broken and retested. And the only thing stopping this from falling right now is the monthly pivot. So if the monthly pivot were to break, then I think there's some downside here for the Aussie. And where that ends today is probably anybody's guess. But if you're looking at levels, you're probably thinking back side of this trade or the top side of this trade line. So depending on when it gets there, yeah, let's be absolutely ambitious and say it's going to get there at that time. You could be looking at around about a 30 pip gain. You'd want about a 10, 12 pip candle to entertain that thought, I would have thought. But where you're going to trade it from is the question. And at this point in time, all I see is this trade line. I don't see anything else on offer for us. Maybe if we get to there, we can trade it. But yeah, a lot of time's got to go by, and really, I don't think I'll entertain you by giving you a whole lot of scenarios. It's just a waste of time talking about it. It's too far away. Aussie CAD. Yeah, again, going back to the Aussie news today, which was GDP figures, and it was a miss by 0.1 of 1%. Nonetheless significant though. But I go back to yesterday or Monday's figures, which were the current account, and I said it was only the second time, and in succession, mind you, that we'd had a positive current account in Australia, or was it balance of trade? Can't remember. Whichever. Same sort of thing. We in fact, that hasn't happened in 46 years. I said it was from 2000 that I hadn't seen that. Well, it's the only chart I had available to me. But if you got to go back 46 years to see that have happened before, where we've had two positive numbers. Was it trade balance? Let me get it right. I better not. I better not be talking falsies here. We need to get this right. where is the Forex Factory? Not there. No. Where? There we go. Righto. Forex Factory. It was the current account. So 7.9 billion. If you weren't in the room, I'll just show you that graph. And this was the one I was looking at. I suppose I could go back further if I wanted to. But take my word for it, 46 years since this has happened. And that's just an astounding graph to me, where we are now trending upwards without doubt. And it's just getting better. So that's got to be positive for the Aussie. And that's kind of one thing that had me a little bit concerned today about the trade that I took short on Aussie yen, but I'll get to that in a minute. But it would appear that the news that we got today, which was the GDP number, which of course central banks look at big time, we will be, it has trumped that number by the look of this. And we appear to be seeing an Aussie sell-off. I'm okay with that because I'm short Aussie yen, but I don't see a way to trade this right now. I think we need a bit of a pullback of some kind. Again, for me, I need a trade line, and the trade lines are a little bit scant at the moment in this vicinity. So again, Aussie CAD is not on the radar for me on the small time frames. It is, however, on the 4-hour chart and the daily chart, because it's very clear here that we've got a potential false break of this trade line. So I need to see a candle go back to test this, the backside of this now broken trend line, and look for a short. The way the market's forming at the moment, that doesn't look to be on the cards right now, but anything can happen at any time, as you know. So that's the scene on Aussie CAD. Nothing on the short or small time frames, but I am looking for a pullback to the trend line to be able to trade it. This is the trade that we did take this morning in the TTR show. We traded on the 4-hour chart. Yep. Okay, so we had, again, a very clear false break of this trend line. Seems to be false break season, and that's just perfectly fine by me. Love trading false breaks. Why? Because the majority of breakouts are false. That's why. What we had here is a break back. Didn't quite make it to the trade line, but we did have news coming up, and I was fully aware of that, and I had a sneaking suspicion, not inside knowledge, but I had a sneaking suspicion that the GDP number would be bad. It wasn't horrendous, but it wasn't good. And we got a nice reaction off that, apart from the fact that we had a technical setup anyway. So I did take that short. We have banked, and I've moved my stops to entry. Oh, haven't got my stops to entry on this one. Why not? Okay, because I wasn't looking at this particular account. I am moving my stops to entry. Let me do that. Modify. Entry was 74.23, I believe. So that can go to 74.23. Okay, that's where it needs to be. Why? Well, I was actually expecting a bounce off the weekly pivot, and if we got back above this trend line, I figured we were actually off to the races, to the opposite direction. And if that were to be the case, then I didn't really want to be caught in a losing position. So this can only be a winner. What do I do now? I like this bar here. This is the daily chart I'm going back to. I like the fact that we've had, well, not really, well, they are 3 false breaks, I suppose. There's one false break, there's another, and there now is another. We've put in a significant lower low. We've now put in a significant lower high with a reversal bar, and it looks like we may be looking to follow through on that. Maybe I've been a little bit rash moving my stop to entry, but again, the weekly pivot is likely to create a bounce. And if it does, and it goes back above this trade line, then we've got potential false break on our hands. So that's why I think this is protection enough. And as I say, I don't want to turn a winning trade into a losing trade. So that is why I'm doing what I'm doing on Aussie yen. Would I be willing to trade this as a false break? Absolutely, because that would be a very clear signal. This is a great trend line or great trade line. Love these. Absolute beautiful frequency of tests. Absolutely fantastic. That's what you're looking for at all times. And when they break, that well, when price approaches them, they do one of two things: they break or bounce, right? And when that happens, especially on about the fifth test, you can expect a fair distance. So I'm hopeful that's going to be to the short side, of course. But if we were to come back here and it creates a false break, then I'm more than willing to trade it long as well. As far as the smaller time frames are concerned, let me go a bit wider. Yeah, nothing to do really, is there? It's very much a case of if you're not in this at the moment, then I'm not sure how you get into it, because there's no trend lines available, no trade lines available. Another strategy might get you in, but I can't help you here. I don't see a way into this from a one of my strategies point of view. Let me put it that way. So nothing to do here on Aussie yen, and as I say, if it comes back above that trend line or trade line, then there's something to think about, but not just now. Euro yen. Small time frames again a little bit difficult. Bigger time frames not so much, because we've had, well, I won't say a clear break, but we have had a break of this trade line now. Yeah, it's messy. I've got to say it's messy on the 4 hour chart. We looked at this yesterday and said that candle would have been perhaps a nice candle to trade, but on the time it arrived, we were trading straight into the daily pivot, straight into the monthly pivot. It turns out that may have been the way to go. Yes, we stopped at the pivots, and that's kind of where we're log jammed at the moment. But we have had a break and retest, so potential for this to go lower is definitely there. I don't see an opportunity for me right now. I do see a low test bar and a low test bar here. Whether that's an opportunity or not is another story. I'm looking at a 4 hour chart now. Look, it's not the worst. Not the worst at all. It's the daily telling me. Still telling me the same thing. Okay. I might have a look at that, guys. I hate where it is. It's right on DS1. That's really my concern. Let me see if there's another way into this. And I'm thinking short, right? There is another way in, but it's going to take a lot of creativity from Price. Price has got to get up to here and then test the daily pivot, then shoot straight back underneath here, retest a lot of them, weekly pivot, monthly pivot, daily pivot, and the trade line, and then give me the false break signal that I seek. I'm asking a lot of it, aren't I? A heck of a lot of it. But you know, the reality is that's what I'll be looking at. There is another one. Let me get rid of this trade line. There is another one that could provide exactly the same scenario, and there it is there. I much prefer the first one. Why? Because we've got an untested daily pivot. That's why. But like I said, I don't know if it was yesterday or Monday, when markets reverse, it's often the case that the daily pivot does not get a look in on the first or second day. It certainly got hammered the first day, but the second day we haven't seen a retest yet, or we haven't seen a test yet. Wouldn't surprise me if we don't. So here's the way I'd look at this. Apart from what I've already said, exactly the same scenario off this trade line. So let's get back up to here. either hit the weekly pivot, the trade line, or the monthly pivot, or all three. Who cares? Then come back underneath this one. A retest there gets me short there. Or if it doesn't make it up to there, a break back under here and a retest gets me short here, taking profit before that level. So yes, there is a way to get euro yen short, and that will be the best that I can find. Would I trade it at full risk? No way in the world, because I've still got this untested daily pivot, which always is a consideration for me. So answer's no. It wouldn't be at full risk in any way, shape, or form. Quarter risk maximum until we hit the daily pivot. If we hit the daily pivot and you see that, different story. You can trade that with far more confidence, taking profit again before that level. So that's euro yen. Haven't had anybody suggest how we should be trading these pound pairs. What's wrong, guys? There we go. There's no such thing as a silly suggestion. Guys, that's it. That's the crosses that I'm looking at. Not monitoring the pound pairs other than the breakout. And there we go. We have had a breakout yet again. And our entry was there. We are currently 30 pips to the good. Okay. Guys, I'd be taking profit right now. Absolutely would be taking profit right now. Not everything, but I'd be taking something off the table. I'm not in the trade, right? We're still trialing this. But definitely be cancelling the short. How's pound yen going? Or guys, that reminds me of the other thing. Pound yen hasn't been triggered yet. That can't be right. Is that 10 pips? There was that was the top of the range, wasn't it? What's that? That must be yesterday's. Or was that the entry level? That was the entry level. And I said I didn't want to take it. But there you go. There you go. It can be done. Again, I'd be taking profit. That must have been yesterday's, as I said. I'd be taking something off the table there if I was in this trade, most definitely. So that's interesting. Another two winners on pound US dollar and pound yen trading the Open of London session. What do you think, guys? You think we've got something going here? It used to work for me, really, when I traded it many years ago, and I don't know why. Oh, I know why I stopped trading it, because I wasn't in front of the charts for London Open. That's why. But yep, I'm starting to get a little bit back into the swing of things here. It's kind of making sense to me again, which is great. Just quickly back through the 30-minute charts. I don't think anything would have changed, and then I will bid you adieu. So if you've got any ideas on this, guys, pump them out. Nothing there, although that's kind of looking better. We now at least got a swing that we can use. So we've got a trade line coming now on euro US dollar. So we can play break, retest, or false break back and go long, whatever takes our fancy there, whatever shows up. Nothing has changed on Euro CAD. Aussie US dollar, again having a struggle at monthly pivot, nothing to do. This really does need to pull back to this trade line if I'm to find a trade on Aussie CAD, but it doesn't look likely at the moment. Aussie yen, yeah, I can't find any way for you guys to get into this. The only thing I would say is if price gets back above the trade line and retests it, then look at the long. But I think this looks like a phase 2 move to me, and I think we're going to get some more downside. Well, I hope we do, because we're in the trade, of course. And finally, euro yen. One of our scenarios might be coming up where again, I'll just repeat, looking for a false break short off this line. So up here, hit the weekly pivot, back underneath, retest it, go short. Same on this trade line, up here, back underneath, retest, short. Same if we get to the daily pivot off one of these trade lines, exactly the same scenario. And that's the best case scenario because we do want the daily pivot to be tested. That's what we're seeking. We want something to trade short off here, but we will accept something down here. But again, adjust your risk accordingly. It needs to be a little bit light on as far as the stake that you put on the table is concerned. Right, guys. I don't see any questions. I don't see any opinions on the London Open breakout trade. Maybe we'll just drop it. Not interested? Or should I keep going with it? Should I keep forward testing it? Silence was the stern reply. Maybe nobody's listening to me. Nobody's talking to me anymore. All right, I will leave it at that then, guys. We will catch you tomorrow for the final session of the week on YouTube. I don't have any more commitments today either. I will be, of course, monitoring those situations, all those potential trades that we have flagged, and I'll continue to manage my Aussie yen trade and my euro dollar trade, both of which are winners, which is a good thing. Winner chicken dinner. You're welcome, Zayden. Okay. Yep. If you're keen on doing it, then just keep monitoring it, and we'll knock off the bad ones, and we'll see exactly how we need to trade this effectively, so we can get some nice money at the end of the day. That's what it's all about. Thank you, Sino. We will catch you all tomorrow when we'll do it for the last time this week, and I'm hoping to catch up with Ash to see how he's going on the footsie. It's actually tanked, and I've got a funny feeling he'll be a very happy boy if it's gone that far, because I know he was looking to get short, very much so. Thanks, Chiwi. We'll catch you later, guys. Have a great rest of Hump Day. Bye-bye for now.